What's going on, everyone? On Friday, 59% of the S&P 500 closed down in the red, and we hope you all had a nice, relaxing weekend and are ready to crush it this week, as we had some great movement last week, especially towards the end of it, and I know a lot of people did very well from that. And the good news is that this week there's going to be a lot more opportunity, as we have some huge earnings from companies like Apple, Amazon, Meta, and many others. Tesla is ripping off some good autonomous driving news, as we can see by that major rip on Friday. At the same time, a record $19 billion is flowing into U.S. Treasuries. Inflation expectations are at their highest level since 1981. Consumer sentiment is at its lowest level since 1978. In today's video, we have a lot of great, useful data to showcase, and we're going to cover everything you need to know to make this week a great one. Tom, let's get right to it.
Yeah, on Friday, the SPY made a great run, and we can see that on Thursday, the SPY peaked out pretty much right around that 550 mark, and on Friday, we ended up closing above there, which was a great sign to see, and we can see that pretty much all week last week, we had really nice price action back to the upside as Trump is softening his stance on tariffs a little bit. I know that they talked a lot about China last week and potentially reducing tariffs there to get talks going. That is part of the main reason why the market has been ripping the way that it has been back to the upside. So that's awesome to see. And I know we talked a lot about Tesla leading the way Friday, up 9.8%, almost closing up 10% with Tesla. This is an insane move. And as we look at Tesla here on the daily chart, Mike, they're starting to base really well off this 220-ish support. There's been a lot of good price action and bounces very close to this level. And now it's getting back towards the top end of its range around 290. And we're starting to see a lot of positivity creep back in here. There was relaxed rules for autonomous driving last week, which really helped Tesla boom. And I thought one big piece of news was obviously Elon saying he's going to spend less time on Doge. You know, Tesla, their profits have been plunging, like it says here, 71%. And Elon's been focusing so much on Doge that it's almost like Tesla's been on the back burner. But I think people are starting to get some optimism with Elon coming back.
Definitely. So that Elon news is definitely great, but even the autonomous driving news is very helpful as well. The U.S. Transportation Secretary basically said that this administration understands that we're in a race with China to out-innovate, and that our new framework will slash red tape and move us closer to a single national standard that spurs innovation and prioritizes safety. So it looks like they're opening the door for more autonomous driving. You know, Tesla definitely is certainly big into that, and that can definitely help when there are, you know, regulations working in this company's favor. I think a lot of this move also has to do with some shorts getting squeezed out. Like you mentioned, Tom, Tesla's been holding that 220 area in a very strong way, which helps as well. And we can see we are getting closer to that like $290 and $300 resistance area, which will be strong. But if Tesla can break through this, that would be a phenomenal sign.
Yeah, and they definitely can. You know, Tesla's a company that whenever they start to trend, they can trend really well. And the funny thing is at the end of 2024, Tesla actually posted an all-time high before this massive dip. And Tesla's had a history of having huge upside moves and huge pullbacks and just having crazy trends that last for quite a while. So I'm definitely watching this base. And if we start to get up through 300, I would love to see Tesla start to get towards even 400 and then obviously start to go for that all-time high test, but that could take some time, of course. Maybe not as much time as some people think. Like, as we can tell, in February of 2025, Tesla had a pretty bad drop, falling from 400 pretty much down to 300 within that one single month. So we can literally see 100-point swings within a month on Tesla.
Beautiful, honestly. And they just did report earnings last week, so they are getting a little bit of that like post-earnings run as well. If you had to pick one level to watch for Tesla in the short term for those who are looking to trade it, what would it be, and what should people look for with this stock this week?
So for this week, I really like that peak from Friday, very close to 286 to 289. If we start to break through there, I'm definitely going to watch for a 290 breakout to start to occur. I really want to see though some good pressure above that high of day from Friday, and then we could start to get that good push to the upside like we're looking for. But those overhead resistances are very important around 290 and then 300. Those are going to be very crucial. So as the breakout starts to occur, you need to watch those for potential potential rejections or potential touches as Tesla starts to move. But of course, these resistances will eventually break if Tesla gets enough momentum. So keep that in mind.
Sounds good. And while Tesla is certainly doing very great and certainly has good news with it, Nvidia, not so much. What's going on with this stock? I saw a little bit concerning news this weekend.
Yeah, definitely. So China's Huawei actually developed a new AI chip seeking to match Nvidia, which is pretty insane. They're going to call this the Ascend 910D. They've already had a couple other of Ascends like the 910B and the 910C, which they're actually slated to ship around 800,000 of those out this year. But their new chip, the 910D, is supposed to rival some of Nvidia's most powerful processors like the H100 and their H20. So Mike, as I start to see all this news with Huawei, it's like, okay, the United States is curbing exports from Nvidia's chips to China. That obviously hurts them. And then number two, now there's actually increased competition with Huawei developing chips that are supposed to be as powerful as Nvidia's. Now, at the end of the day, we'll see if it ends up being as powerful or not. But either way, it's definitely something that I think could hurt Nvidia in the short term. And it's China trying to show, hey, we don't need the USA and we don't really need Nvidia to continue getting these AI chips.
Yeah, and that's definitely a worrying sign. Like we saw earlier this month, Nvidia does have that $5.5 billion charge related to their, decreasing China sales, which definitely hurts. And then when you just stack on increased competition as well, it's definitely a rough sign. I think the biggest risk here is if Huawei will be able to actually compete. They are a powerhouse in China, but, Nvidia definitely does have some pretty great tech on their side. So we shall see here. Looking at Nvidia, what would you say are like the key areas to look at on this one's charts for potential moves?
Yeah, on Friday, I noticed whenever they ran to the upside, they started to fill this gap on the daily chart pretty well, and they closed pretty close to there around like 110 to 111. I really did like $110 on Nvidia in the short term. If it can continue to hold above 110, which was a pretty big level from Friday, I think that would be a pretty good bullish sign coming this week. And I do like that peak around 112 as well. Really nice whole dollar level from Friday. So you can watch that for a good breakout there. But as we zoom out a little bit, there's just been so much resistance on this stock around 115. So if we start to see a big rejection at 115, that's something that I'll definitely be worried about, as there's been a lot of reaction there.
Definitely keep this one close on watch. Nvidia stock moves pretty strongly, and this news certainly isn't the best, so keep it on the radar for some potential rejections. But Tom, we have a mega earnings week ahead of us. As we can see by looking at this week's schedule, we have big tech powerhouses from Microsoft and Meta to Amazon, Apple, and many other companies. What a week we have in front of us.
Yeah, this is pretty insane here, and there's even a lot of like smaller companies mixed in as well, like MGM on Monday morning, which is interesting, PayPal and SoFi on Tuesday morning, and then we even have Spotify Tuesday morning all the way at the bottom of the list here. That's how many big companies are reporting. FSLR, Tuesday and after hours, Robinhood even mixed in. But I think the main thing to look for here is Microsoft, Meta, Amazon, and Apple. Wednesday and Thursday, those are going to be the two main days to watch out for. Although I will say, like, let's say we start to see FSLR pop up following their earnings Tuesday. That could definitely be something to look at for a possible continuation play. But there's just so many popular big names here, like even Robinhood, Qualcomm. It's like the list is never ending.
Seriously. And, this is important for multiple reasons. Not only will these stocks move in crazy ways, but when you have big tech powerhouses reporting this week like we do, that will significantly impact the market as well. So, Tom, I'm going to give you a tough question here, but if you had to pick one company that you're watching more than anything else for earnings this week, what is it?
I think this is going to come as a bit of a surprise here, but I'm actually going to go with Meta in the short term. I'm sure a lot of people are looking at Microsoft, Apple, or Amazon, especially Apple with all the tariff stuff going on. But with Meta, I've been really liking the way that they've been basing around this key $500 support. And if they get a good report, I would love to see them start to get back to the upside here. Meta was recently up around 740, and now they're down quite a bit. So come on, Zucky.
And another stock that I think is definitely worth considering is FSLR. Like you mentioned, they do report earnings after the bell on Tuesday, and they've been doing pretty well in the short term. And when they move, their movement is like pretty strong and clean as well. They had that good news last week with how the U.S. is doing up to 3,500% tariffs on some Southeast Asian solar like power manufacturers, and the stock has been beaten down in like a broader sense, and it's finally starting to get good momentum. Of course, a stock like this one is definitely like higher risk, higher reward, but I think there can be some decent movement here, especially if the company comes out with some good guidance. So it's definitely on my radar.
Yeah, I love the way that they've been moving in the short term, and on Friday, they actually started to break out above that key, like 140 to 141 area. If that can continue here this week, it would be fantastic to get back towards like 155, 160. Definitely one that I'm going to keep on the radar as well, but like Mike said, go ahead and screenshot the earnings calendar if you want to, and then there's even a lot on the economic side of things this week, Mike. We have JOLTS job openings data on Tuesday. On Wednesday, we have GDP and PCE data, which is going to be important. On Thursday, there's ISM manufacturing PMI, and then Friday, non-farm payrolls and the unemployment rate as we start to kick off May.
I'm excited, Tom. We're going to have a great week this week. Lots of strong movement and lots of opportunities. Speaking of economic data, though, I did see some very interesting but also very good data related to how a record $19 billion of inflows is heading into U.S. Treasury funds. As you can see on this chart here, this is the largest reading we've ever seen, even larger than the COVID pandemic scare. So basically what this is showing is there is now a lot of money flowing into U.S. Treasury bonds, which is really good for multiple different reasons. Not only does this show that the bond market is stabilizing, but this also helps push interest rates lower, which is great to see. And it definitely helps, just I guess you could just say the U.S. in general, as just more money is flowing into our bonds. So take this how you want, but it's definitely a great sign, and it definitely helps stabilize the market quite a bit.
Yeah, and I'm watching US 10Y in the short term. It's been falling off a little bit, and we've been starting to see TLT try to base a little bit around $86. So I'll definitely be watching TLT very closely. See if we can continue to move back to the upside here for sure. And then I know at the same time, Mike, there's also been a lot of talk with inflation expectations. On Friday, we got some Michigan consumer sentiment data and inflation expectations. And my gosh, inflation expectations just rose the highest level since 1981, looking at 6.5% on the 1-year expectation. That's pretty insane to say.
That is nasty, honestly, and I think there is some good news that can come from this. Number one is that inflation expectations rising are bad for multiple different reasons, but considering that they are already this bad, if in reality inflation ends up rising lower than what everyone's expecting, the market will deem that as good news. So it sucks that sentiment is rough like this, but as long as like the real inflation doesn't come in just in a brutal way, then that will be a good sign for markets. And we could even see here that U.S. consumers are now feeling as pessimistic as they have since 1978. So yeah, there's definitely some rough bearish sentiment out there from the whole market.
Yeah, there's been a lot of sentiment changes, and it hasn't necessarily been good lately, but I will say last week, I think things started to shift a little bit. If we go and we look at the SPY, while a lot of these readings are mainly talking about the past month, I do think in the ultra short term, especially with Trump maybe relaxing a little bit with China, we're starting to see a little bit more bullishness start to come in. And we talked a lot about the Zweig breath last week, Mike, and again, that trigger was pretty huge, and it generally shows a lot of bullishness coming after we get that trigger. So, when we look at like the 1 week to 3 week later categories, it looks pretty dang bullish. I will say though, you can zoom in even more here and see what we look like 1, 2, 3, 4 days later. It's not always the best here, but when you get to like a week later, things generally get pretty good.
Seriously, like when you look at the weekly time frame and even further out, this is one of the most bullish signals I've ever seen in the market. But when we look at it in a shorter term sense, we will be Monday will be the 2 days later mark, which as we can see by the data, it's not the most bullish ever, but the market does end up positive 70% of the time, which is good to see.
Yeah, 100%, and I'm a little bit more bullish going into this week, so I'm glad that some of this data definitely suggests that we could get more bullish price action. Now, of course, sometimes there's economic data, and it can be cherry-picked a little bit. There is some NASDAQ data that came out that shows that if we go up 1% for 4 straight days, you can generally see a pullback in the short term following that, with the 1, 2, and 3 following days being pretty much in the red. Only 25% of the time it's green on the first and third third day there. So definitely not the best sign, but I will say, not all data is the same. And if there is good bullishness this week, we could kind of discount this a little bit.
Definitely. And I think what we're ultimately seeing right now is a lot of bullishness in the market in multiple different ways, but you have to expect a pullback too. Like the market has been crushing it, and if you expect it to only go up without it having pullbacks, then, that is just, a not good way to look at the market. So I guess as we look at SPY right now, Tom, we technically are above that key 550 resistance, but what are the most important levels to watch for SPY in both directions heading into tomorrow?
I really do like 550, using that as a solid support. And then there was also some huge support around 544 to 545 that I'm also going to be watching for this week. If the SPY does pull back, there might be some littler supports, mixed in between there, but those would be the main ones if we do get that pullback coming in on Monday. But looking at the SPY and looking at it popping off in the short term, it's running up into some key areas of resistance. I think 558 to 560 is definitely going to be on watch this week. That has to be one of the more key levels that I'm watching for. As far as Monday, 554 should be pretty solid. But one thing that I'm looking for in the short term is for SPY to really get back up into this range. We can see that whenever the SPY sold off at the beginning of April, it really hit that 570 level. And had a nice peak before that drop. So getting closer to like 570 to 575 is definitely something that I'm going to be watching for the SPY to try to get done in the short term. But we definitely need to get above some of these key resistances, though. I will say holding 550 will be a great sign for this week.
Yeah, the trend is on the bull side, as is a lot of these market stats, but at the same time, be prepared for a pullback. I think the biggest gains this week can definitely come from the earnings lineup. We have a lot of big companies set to report, and if they do well, they can directly drive the market with them. So keep them close on watch. And besides that, Tom, let's jump right into some setups and predictions. A stock that is close on watch is MU, and it is to the upside. I know I mentioned this one in last week's last video, and it did pretty well on Friday, which is great to see. We had a recent big money play with this one with nearly $3 million going into the 75 strike calls for June 18th of 2025. This trade is doing pretty well so far, and it's definitely still on the radar as the stock is moving pretty strongly, and it's holding some of these lower support areas around like $64 pretty well. MU is definitely on my bullish radar. I think there is a lot of potential holding this one for like multiple weeks to months at a time, especially with the big money play here at the 75 strike calls that expire towards like the middle to end of July, but it's definitely close on watch.
Yeah, MU is starting to base really well, and having a lot of great price action in the short term with a lot of these good tech stocks. So I'll definitely be continuing to watch that one to the upside. With my next stock, I'm looking at CZR, Caesars. They're actually doing very well in the short term also, running up towards $29 here. If I end up seeing a breakout above the high of day Friday, right around $28.70, I'm going to watch for a $30 push in the short term. I think there could be some good opportunity playing this one to the upside through here. If you're going to set it up with like a reward to risk ratio, I do like having the stop loss somewhere around like $28.30, and then you can target, like I said, $29.50 to almost $30 to the upside. It makes for a really good reward to risk. So that's what I'm watching for with CZR, if it can get above that high of day from Friday. And we're just seeing so many stocks that have been beaten down starting to recover now.
Definitely. And as you mentioned, like stocks that have nice like reward to risk profiles right now, I think Google is another one that is definitely worth keeping on the radar. They reported earnings last week. They had a great initial move, but sold off on Friday as the market opened. This one is definitely on my radar if it can hold this 161 support area. We can see right now the stock is around 161.70. So like you can risk like around 70 cents. And in the perfect world where the stock does hold this level, I don't think it's unrealistic to see this stock get back to like 166 to 168 or maybe even 170 depending on the momentum in the market, which again just presents a great reward to risk setup. But I do want to see it hold 161. If this gives out, then it's hard to justify in my opinion.
Yeah, definitely. Hopefully, we do see Google hold up. It was one of the more influential tech stocks moving last week, and then that move on Friday had me kind of sad following the earnings. But of course, the earnings continuation could definitely still continue into this week. With my next setup, I'm looking at Advanced Money Destroyer, or AMD, and I think we're gonna have to start calling it Advanced Money Dispenser because it's starting to pop up pretty well on the daily chart. It's holding this $80 support, but even in the short term, it's pushing up towards $100. As we can see here on the Bookmap, there is a massive sell wall at that $100 mark, but with around 57,000 shares there. What I'm looking for on Monday is a good break above 97. We can see that there were some sellers stacked up at 97. They actually got hit, and then more even came in there. So if we see a good $97 breakout come Monday morning, I'll be watching for a push towards 100. Just be very wary of that $100 resistance. There's obviously a lot of sellers there.
All right, sounds good. 100 will be close on watch. And besides that, Tom, let's jump right into today's momentum plays. And with the first one, we have SoFi, SOFI, to the upside.
SoFi is right around $13. If they can break their high of day from Friday at $13.05, keep watching them up.
Sounds good. With the next one, we have Coinbase, COIN, also to the upside.
Coinbase can be pretty awesome here in the short term. If they can break out above 211.60, keep watching them up as well.
All right, and then with the last one, we have Barrick Gold, GOLD, to the downside.
You know, GOLD did not do the best on Friday, actually gapping down a little bit. Maybe gold is pulling back here a bit, but if they break under $18.90, keep watching them down.
Sounds good. So we have these three stocks on the radar for potential continuations tomorrow, only if they break through the levels listed. As always, with these setups, they are volatile, so you have to protect yourself, have stop losses sized reasonably, have a thesis for every trade that you ever take, and prioritize smart, long-term, disciplined trading habits above all else. You can learn a lot more about this and a lot of other key information for free in the Key Lessons channel of the Stocked Up Discord, so definitely check that out. But besides that, Tom, let's jump right into today's $1.5 million big money trade. And we are looking at ticker symbol PRGS. On Friday, the big money bought the $57.50 strike call options that expire on September 19th of 2025. Again, this is a $1.5 million trade. The more the stock goes up, the more the big money will make in this situation. Basically, PRGS is an AI software company, and their stock has been doing very well, especially in a broader sense. They've been uptrending very strongly. They are in the process of bouncing off multi-year support around this $54 area, and it's definitely a ticker worth keeping close on watch. I like how these options are already in the money, and they have a fair amount of time to them too.
Yeah, this support on like the daily and like yearly time frame is definitely huge, close to like 50 to 54. I'm definitely going to keep watching this one to the upside. I love the way that it's setting up here. There's so many stocks in the short term that are starting to break out of their bases. You know, this one has a huge resistance here, close to this like $59 to $60 area, and I would not be surprised to see it break and go on like a larger run here. So I'll definitely keep PRGS on the radar. Something to watch for on the daily chart is there is a bit of a gap here where it started to fall up to around $63. I'm sure a lot of people are going to be looking for that to fill, but either way, there's big resistance close to there as well.
Sounds good. And if you guys are new to the Stocked Up YouTube channel, definitely consider obliterating that subscribe button so you can get our videos recommended to you more often. Every single day we cover the most important news, information, big money trades, chart setups, and data that you have to know about. It takes us hours to make these videos, and we even showcase cool charts that you never otherwise would have seen. So definitely consider obliterating that subscribe button to get our videos recommended to you more often. But we also want to give a giant shout out to today's member of the day, Mellis27 in the Stocked Up trading floor. They crushed it on Friday, and they had some great trades all around, especially with Tesla, Palantir, and Robinhood. So huge shout out to you, Mellis. Keep up the great work going forward. And it was awesome to see that nearly $4,000 day on Friday. If you guys are into short-term trading and you want full access to the trading floor, definitely check out that first link in the description in the comments down below. You'll get full access to our army of trading robots, spots. You can chat with Tom and myself all day long, access the big money plays before we talk about them in these nightly videos, among many, many other things. If you do want to sign up, make sure to use coupon code BIGMONEY because that will lock you in at the lowest rate possible for the yearly plan. Definitely check it out, and we can see on Friday there were definitely some bangers with search bots. So that's great to see. But besides that, guys, we have a great week ahead of us. There's a lot of big earnings on the lineup. SPYs at key levels, and like we showcase when we look at multiple different aspects of the historical market returns given the situations we're in, whether it be with this wide breadth thrust or even some of this recent price action with NASDAQ, we definitely are set for a great week. Thank you all so much for watching, and let's crush it in the market tomorrow.